I'm Sam, the head of the Adara Academy, and welcome to another daily update. Let's take a look at BTC to start out with, just to see what has actually been happening in the market for the past few days. I want to go out to 1 year. So taking a look at the 1 year movement in BTC, we can see that the two things going on here. We're still out of value. So I want to talk about this over here on the left and why I think it's very important. So this indicator that I'm using is called volume profile. It shows volume on levels. So down here we have volume on time by day in this instance because it's daily. And on the left we can see volume at certain levels. So what this shows us is this red line, which was the most traded price for the previous year. And then we can also see these high volume nodes. Here's one at 3,835. There's one here at 5,250, 6,408, and then 79,000 or 7,980. And these are areas where quite a lot of trading actually took place. They show that there was good price acceptance at these levels. And also up here at 10,230. So all of these levels were highly traded levels. Now I have three colors here. There's the yellow, the dark, light blue, and then dark blue. The yellow signifies where 30%, or the greatest 30% of all trading took place over the previous year. The yellow and blue signifies 70% of all trading volume over the previous year. And then everything that is outside of it, that's dark, in this case, is everything that's not within that 70%. So the majority of all volume and trading took place in between 8,200 and all the way down to the lows at 3,110. So what I use this for, typically, is to see how the distribution occurs, and then also where potential distribution and where potential buying is going to take place as we move into different levels. So when I look at this chart, I see that there is a heavy accumulation that took place here. You can see that the shape of this curve is very tight. It's all kept within a $700 range. Is where the majority of all the accumulation took place for Bitcoin. And that makes sense, right? Because from like January 1st, or even November, from November all the way up until, what's this, March, the end of March, so the beginning of April, the price of Bitcoin just stayed within that period. And so the majority of all contracts were traded within this range. Then we had this big price explosion that came out, and we had a bit of trading that took place in here. Actually, a heavy amount when taking into account the trading that took place back in November of last year. And then from there, it was pretty light, going all the way up. We went through 6,500 pretty easily, which had been the previous most traded price. We ended up in this, in June, what is that, around 7,800. And then we shifted up into this upper range, which we had been trading in for the past 3 months since July. Now for October onwards, I would expect that there's some return to a mean is what I'm looking for. Back into this value area is most likely what I think is going to happen, and we fill out this volume here. So one thing to take into account is, let's actually zoom out. We'll get the full, let's do it 5 year. So this only goes back until when the CME futures were launched, and so it could be, yes, so it could be a little bit biased. Right, so here we can see that the value area going all the way back is still roughly the same. It's about 8,200. And most of all the trading that's taken place on CME futures has happened between 8,200 and then at the bottom at 3,200, with the majority of all the trading taking place at the bottom, where there was heavy accumulation for several months. There was actually more trading at this 3,830 level than there was at the 6,500 level, which is where we were stuck at for almost, what, 3 months back in 2018. So I can see that there's been heavy distribution going here based on the shape of this curve. The real test is going to be if we enter into the value area again. If we start to come down to these levels, I'm not saying we're going to come all the way down to 3,800, it's a possibility, but we could see some of these high value nodes act as support and resistance. So this high value node at 7,950 or 930 served as the support for this move that we had 2 days ago. On the next move down, I would assume that 6,500, 6,400 will be the next support that we find because it's the next most traded price as we go down below. And then from there, 5,200, and then finally 3,800. Pavel agrees with me. Now, it'll be interesting to see, right? Because as we go lower, there's more incentive to buy, and there's more incentive to start to purchase an asset that's 60 to 70% off. So moving on to a couple of stories. CoinDesk reported that coin venture firm One Confirmation, which is backed by Mark Cuban, announces a new $45 million fund. So it's an early Coinbase employee named Nick Tomino, and they focus on seed rounds, and they invested $26 million. So one thing that I actually thought was very interesting is a quote that he said, saying, "Today, the current total market value of crypto assets is roughly $272 billion. And investment and speculation is the only mainstream use case. We think the next 5 years, the total market value will surpass $1 trillion as the investment speculation use case continues to grow and other mainstream use cases emerge." Even people that have worked for large companies like Coinbase and other have a wealth of investment experience in the blockchain see that really there's only one use case right now, which is investment and speculation. And they hope that in the future, another mainstream use case emerges, but they don't know what it is. And it may or may not happen. There may only be one use case with crypto assets in that they're easily tradable and liquid and cannot be shut down by any regulators, which allows for high-risk trading to occur pretty much unfeathered without any involvement of regulatory process. So rolling on to the next article that I want to talk about, it's about Fold raises $2.5 million to build out its Bitcoin payments and rewards offering. So this is a payments company that allows you to get Bitcoin cashback on purchases. Not a bad idea. I think it's pretty interesting if you're just out spending your normal money on clothes and food and you get a little bit of Bitcoin back. There's another service called Lolly, which has been operating for a while, and they are similar, but they don't have a mobile app. So this will be one of the first mobile apps that you can use to get Bitcoin cash back on your purchases, day-to-day purchases. And lastly, one of my favorite websites, Skew, raises $2 million to build out its cryptocurrency derivatives platform. So Skew's based out of London, and they do some amazing work, amazing work. All right, it's going to wrap it up for today for the market update. I'm Sam McCulloch, head of the Academy, and I will see you tomorrow.